Ever get that feeling? You know when you're trying to, like, fix something and
Yeah.
you come up with this plan, this, like, foolproof plan? In your head, at least, it's foolproof,
Right,
and it
right.
just blows up in your
That
face.
makes things worse.
Way worse. It's like, I don't know, jumping out of the bear's mouth and straight into the lion's den.
Out of the frying pan into the fire.
Yeah, exactly. And that's kind of what we're diving into today.
Okay.
We're looking at India's sovereign gold bond scheme.
Interesting. I'm very curious about this.
Yeah, I mean, this is a scheme that really highlights what can happen when governments try to, nudge the economy in one direction,
Right.
and it doesn't quite go as planned. So for our listeners out there who want, like, the quick version, the need to know,
The cheat sheet.
exactly the cheat sheet, we're going to break down exactly what happened with this gold bond scheme in India.
So this scheme, when was it? Like 2015?
Yeah, around there. So
Yeah.
back in 2015, India had this, big love affair with gold.
Right. Yeah. Culturally.
Huge cultural thing, yeah. People love to buy gold. But all this gold buying, it was leading to, massive gold imports.
Okay. So that affects their foreign exchange reserves, right?
Exactly. It was putting a strain on those reserves.
Yeah.
And those are really important, for a country to have, to pay for imports, keep the economy stable, all that.
So basically the government's thinking, we got to reduce these gold imports somehow.
Right. So they came up with this idea, the sovereign gold bond scheme.
Oh, so this is their big plan to fix things.
Yeah, this was the big fix. And on the surface, it sounded pretty good.
Like a win-win.
Yeah, a total win-win. So instead of people buying actual physical gold, they could invest in these bonds. And the bonds are backed by gold. So you're still, kind of invested in gold.
You're getting exposure to the gold market.
Exactly. And the bonds would even pay you a little bit of interest every year. And then after 8 years, you'd get your initial investment back, but it would be based on the market price of gold at that time.
Interesting. So if the price of gold went up, you'd actually make a profit.
Exactly. So for investors, it was like, okay, this is a safe asset. I can get some returns. And for the government, it was like, great, fewer gold imports. We can save our foreign exchange reserves.
Makes sense. So where did it all go wrong?
Well, as you can probably guess, it didn't quite play out like that.
I mean, something must have happened.
Yeah, the price of gold is kind of important in this whole equation.
Right, because the government's promise is tied to that price.
Exactly. And I'll give you a hint. Gold prices didn't stay low.
Okay, they went up. Like, how much are we talking?
Hold on to your hat. Because when the scheme launched, gold was around Rs 26,300 per 10 grams. Now, it's around Rs 84,450.
Wow, that's more than tripled. So anyone who bought those bonds is sitting pretty.
Yeah, they're laughing all the way to the bank. But the government, not so much.
So their liability just
It
exploded.
exploded is the right word. In 2018, their liability was around Rs 6,664 crore. By 2024, it was a whopping Rs 68,598 crore.
930% increase? That's mind-boggling.
It is. And initially, they thought the liability for 2025 would be even higher, around Rs 85,000 crore. But even with the revised projection of Rs 60,565 crore, it's still a huge burden.
Wow. So they tried to fix the gold import problem, and they ended up creating a different kind of financial headache.
A much bigger headache, yeah.
Yeah.
And the irony is, did this scheme actually curb those gold imports?
That's the million-dollar question, right? What happened to the imports?
Well, in 2015, when they launched the scheme, gold imports were at $34.32 billion.
Okay.
By 2024, they had actually climbed to $45.54 billion.
So the imports went up, even with the bonds.
It's almost comical, right? They were trying to reduce imports, and they actually ended up fueling them.
What do you think happened? Why didn't people switch to the bonds?
Well, a few reasons, I think. I mean, gold is so ingrained in Indian culture. It's not just an investment. It's tradition. It's security.
Right. It's like a tangible asset. You can hold it. You can see it.
Exactly. And some people might not have fully understood these bonds, or they might not have trusted them as much as, just buying the real deal.
So what's the government doing now? Are they still issuing these bonds?
Well, here's the interesting part. The last issuance was in February 2024. And since then, crickets.
Really? No announcement? No explanation?
Nothing.
Yeah.
It's like they just quietly swept the whole thing under the rug.
Wow. So the scheme is basically dead.
Pretty much, yeah.
Yeah.
And they're still left with all those outstanding bonds to redeem
For the next 8 years?
up to 2032. And all this time, they've never set up any kind of reserve fund to protect themselves from these price swings.
No safety net at all.
Nope. So it's like they went on this risky ride with no seatbelt, and now they're just hoping for the best.
It really makes you think, doesn't it? Governments try to intervene, they try to fix things,
Right.
but the market, it has a mind of its own.
Uh,
And sometimes those interventions, well, they can backfire spectacular.
yeah, and the lesson here is clear. It's really hard to predict how people will behave, especially when it comes to something like gold, which has such deep cultural significance. So, for all you listeners out there, think about this. What other seemingly brilliant plans are out there that might be harboring some hidden risks? It's worth keeping in mind that even the best intentions can sometimes lead to some truly unexpected outcomes.
I couldn't have said it better myself.
Thanks for joining me on this deep dive. It's been
It's
fascinating.
always a pleasure.
Until next time, folks.
Take care.